Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. We've seen the dollar slip over the past few sessions. It's been on a slew of underwhelming or disappointing U.S. economic data, and as well as a wave of risk-on sentiment from Brexit, better news on U.S. and China trade. They're talking about a deal potentially at the G20 summit in November, or at least an interim deal. So you're starting to see that risk sentiment across the board from the Aussie and Canadian. You're also obviously seeing the euro and the pound respond to positive waves on the Brexit too. So the dollar's seen a lot of reasons to find pressure, and really when you take a step back, you have to remember the dollar is in an uptrend this year, and it's been for quite a while. Where we see support, 96.65, 96.60 area up to about 96.90. We pinged that early this morning, and then we've stabilized a bit, and you're seeing the euro kind of gyrate around that 112. It's out above major three-star resistance. The longer it stays above 111.75, 111.80, it really paints a path of least resistance higher, but you now have support coming in about 111.25, 111.40, and pullbacks that can hold that area too. So the longer it stays up here, you're starting to see more and more support build just below it, and as we look into the ECB meeting later this week. So stay nimble out there. Again, the ECB meeting is on Thursday. Now we're looking at the yen as well. The yen is now, after falling below previous support last week, safe havens in general have seen a lot of pressure. The yen is actually building resistance at what was previous lows. So you got to be careful here because it's encouraging a path of least resistance lower in the yen. And the yen did hold ground fairly well relative to treasuries and relative to gold here today. But now you got resistance in the yen coming in about 92.50 to 92.70. And without closing back above there, again, the path of least resistance is going to be lower to about 91. Stay nimble there, and especially with equities moving higher. The S&P finishing right near major three-star resistance at 3,008. But it's a very strong session, bouncing back from some weakness on Friday, and that pressures those safe havens. But what doesn't pressure those safe havens is really you're looking at those risk-on currencies. Those are actually moving very well. Those are not seeing pressure like the safe havens are. You're seeing those risk-on currencies, the Aussie and the Canadian, move fairly well again today, followed through from some strength last week. You're seeing the Aussie dollar hold out above what was strong resistance, about 68 and a quarter. This is leaving a path of least resistance higher at the moment. That move over the last 3 or 4 sessions, very strong. It's some good data. It started to dissipate some odds of another cut from the RBA, and you've seen the Aussie respond. You're also seeing the Canadian dollar respond very well. There's hopes that we get something with the USMCA put into law. You're also seeing the overall risk environment better, although crude oil disappointing. You're seeing some decent data. We have retail sales tomorrow in Canada. It's going to be crucial as well. But right now, we're out above resistance in the Canadian dollar, about 76 and a quarter. And this makes a path of least resistance higher. Give us a call, though. We're here to help with anything on the board. We'd love to talk about this in more detail. Give us a call, 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates. You can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.